Thanks for clicking. The Canadian Real Estate Association, the CREA, just released the national sales data for the month of October, showing the first increase in sales since the Bank of Canada started raising interest rates back in March. The report comes amid a growing number of outlets saying Canada's housing correction is on the decline, with RBC saying real estate prices should hit bottom by spring, CIBC's Benjamin Tal saying we're not witnessing a real estate crash by any stretch of the imagination, and the CEO of Royal LePage predicting better places next year as a result of the Bank of Canada only raising interest rates by 50 basis points.
We reached the peak with the last increase. So unless there's highly unexpected shift in the trajectory of this market correction, we're heading to better places in the year ahead.
Literally 5 hours after the Bank of Canada raised rates by 50 basis points instead of 75.
This makes us look bad, doesn't it?
It's not great.
And the optimism that we might be nearing the end of Canada's housing correction was echoed by the CREA, which said that the slowdown in Canada's housing market might be winding up. But is this the case? So what I want to do today is go over Canada's real estate numbers for the month of October, discuss those predictions which say the housing correction is nearing its bottom, discuss some of the factors pushing house prices down that aren't really being talked about, including the length of historical corrections and the impending recession, and then discuss what to look for next. Speaking of next, Canada's inflation data is due out tomorrow, which will obviously have a big impact on how high the Bank of Canada will go on interest rates and thus on our real estate market. We'll obviously have updates out on that inflation rate on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this data. Onto the data, the average price of a home in Canada in October was up, though slightly, to $644,643, up from September's average price of $640,479. However, the benchmark price, the price of a home which represents the most popular set of features, was down in October, down almost $10,000. The benchmark price in October was $756,000, which was down from September's $766,000. So a $10,000 decrease in just over a month. Sales also edged up by 1.3%, which was the first month-over-month increase in sales since the bank started raising interest rates in March. But sales were still down 36% from this point in time last year. So the average price was up $4,000, the benchmark price was down $10,000, sales were up a little over 1% from last month, but still down 36% from last year. And with the Bank of Canada slowing down the path of its rate hikes, some are predicting that Canada's real estate correction could bottom out sooner than you might think. RBC just released a report saying that although it does expect Canada's prices to fall by another 14%, it expects our prices to bottom out by spring of 2023. CIBC's Benjamin Tal, who is traditionally a little bit more cautious, says that while prices will continue to fall along with rate hikes, we're not going to see a market crash, and the market will continue to fall until spring.
To be put in perspective, this is not a crash by any stretch of the imagination. The fundamentals of this market extremely strong given the lack of supply, but over the next few months until the spring, I see the market continues to go down, and that's
so RBC and CIBC saying that we will continue to see prices fall, although they should bottom out by around spring. And Royal LePage, as we saw, says that house price declines are flattening and will continue to flatten going forward.
The truth is the pace of home price changes are flattening. We saw biggest changes in the second quarter, less in the third, and we're expecting even less in the fourth.
And as a brief aside, during that same interview, he also said that real estate is no longer the inflation problem in Canada.
Housing is no longer the inflation problem. The problem is sectors of the economy where prices continue to rise.
This, even though shelter cost is a main component of the CPI, constitutes 26% of the CPI basket, represents the fourth largest increase in prices over the past year, behind food, gas, and transportation, has been blamed for pushing the CPI higher, with the pandemic price surge, which hasn't bottomed yet, being attributed to causing rents to go so high.
That looks bad. That looks bad.
So in summary, the CREA says we might be winding up the house price correction in Canada. RBC and CIBC see the bottom occurring sometime in the spring of 2023. And News at 11, Royal LePage sees a banner year for the following year. But is this the case? Is Canada's real estate market going to bottom out that quickly? If it does, it will be one of the quickest bottoms on record. As we learned from BMO earlier on in this year, Canada's real estate bottoms average about 3.1 years. Although the corrections vary widely by cause, the shortest correction on record was Toronto's in 2017, which lasted 0.9 years, caused by interest rates and a non-resident speculation tax. This was followed closely by the housing correction that followed the global financial crisis in 2009 and lasted only 1 year, due in large part to rock-bottom interest rates.
That's not going to happen.
The housing correction that most closely resembles our current environment, though there are some differences, was the one that occurred in Ontario in 1989, which saw the market decline 20% and take 7 years to bottom. While we're probably not going to see a 7-year drop from peak to trough, especially with how fast house prices went up during the pandemic, in general, recessions cause home prices to fall, with job losses, anticipatory selling, etc. Canada's economy grew by 1.6% in the third quarter of this year. While many are predicting a recession coming our way soon, in order to have a recession, we need to have 2 straight quarters of negative GDP growth.
Bullshit!
If a recession is coming and it takes 2 quarters for that recession to come, then Canada won't technically be in a recession until at least April. And it's at that point that the problems really start. We've seen the average price of a home in Canada drop by almost $200,000 since our peak in February, and the economy and the employment rate just hummed right along. So, if recessions push down house prices, and we won't hit a recession until at minimum April of 2023, then I don't see how our housing market is going to hit its bottom by the spring of next year. Everyone, except maybe first-time homebuyers, wants this whole process to be over as soon as possible. But history has shown that housing corrections in Canada, especially those caused by a recession and interest rates, take longer than 1 year. By 2023, the Bank of Canada may or may not be done their path of interest rate hikes, and we still have to wait for them to work their way through the economy, for the recession to work its way through the economy, a recession that the Bank of Canada has said it wants to induce. So we're just not there yet where we can be predicting the end of this real estate price correction, where we can be predicting that real estate prices will bottom by the spring of 2023. The recession still has to play out. We still have more rate hikes coming down the pike. Our employment rate is still ultra low. All of these things need to play out before we can start predicting a bottom and end to this real estate price crash or correction or whatever you want to call it. So we just can't predict it as of yet. With that said, we will continue to follow the path of the Bank of Canada's rate hikes, the inflation rate, and that effect on our real estate prices on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.